The S&P 500 and the Nasdaq closed at all-time record highs ahead of the Fed meeting. What's going on, everybody? My name is Michael. This is Coco. You're watching the Stock Market Brief Show. We use technical analysis and intermarket analysis to help us get a good idea as to where the stock market might be headed next. In today's episode, timestamps are going to be in the description below if you want to hop around. At the end of the episode, I wrap everything together with the conclusion. So let's go ahead and get into it. All right, everybody, welcome back to the show. We're going to start off here looking at the market dashboard. Let's go ahead and hop in. If we take a look over here to the left-hand side, you see all the indices. Okay, the Dow, S&P 500, Nasdaq. What do you need to know? Well, relatively flat, boring type of day today. All right. Oh, yeah, we finished at all-time highs, but everything here is in the green, including the VIX. And we'll talk about that a little bit later. As far as the 11 sectors go that make up the S&P 500, look at there. What's up at the top? Energy and consumer discretionary. Are you surprised? You shouldn't be, especially if you are not new here and you've been watching this show. For example, the XLY over XLP. This is like looking at the wants and need ratio, right? The XLY is more of the, like, I want these type of things, and the XLP is like, hey, I need these things. These are necessities. That's just one way to look at it. And, well, when the ratio goes down, that means the necessities, the defensive type of stocks, are going up. And when this line goes up, it means consumer discretionary is outperforming. And, you know, just a couple of days ago, the last episode that I put together, a lot of the stocks that make up consumer discretionary, some of the bigger names like Amazon, Tesla, Home Depot, they were getting a little bit overextended. They looked like there was going to be some outperformance. And what do you know? We saw that bounce from there, taking consumer discretionary to be one of the top performers so far this week. Energy, if you remember that, energy was also very, very overextended to the downside, and we're talking about some face-ripping rallies. Does that mean that, you know, this is the start of a bigger move? Hey, it's always possible. We'll get into those charts. Another thing that I want to pay attention to, still in consumer discretionary, I had another element down here if you're familiar with this chart, but really, this in the middle is consumer discretionary. That's the line. That's the price action of consumer discretionary on the daily time frame. It's been going up, right? But if you look at the cumulative line, the volume advanced decline line, that's been still heading down. It's been diverging. And then you take a look at the XLY over SPY. This is relative performance to the S&P 500. Although XLY has been taking just moves up and up, it's been underperforming the SPY here for quite some time. So one has to wonder if we're going to see this resolve, one, to the upside, or resolve, two, to the downside. And to me, this looks like consumer discretionaries. If you could start breaking some key levels, it looks like it's going to be heading lower here eventually. Before we move on, I want to thank the 719 now active Patreons. Whether you're in the $4 support my work group for my daily videos, I really appreciate that, as well as the daily trade ideas. This is where you get access to the Discord group, and I post some daily trade ideas there, and typically I'll post a chart with a pattern of some sort, whether it's a falling wedge, a bull flag, etc., and then I'll put potential entries, potential stops, and potential target zones on those charts. And I post, you know, anywhere from 2 to 1 to 5 or whatever might be daily chart ideas there. Let's hop into the S&P 500 now. S&P 500 on the daily time frame, we're reaching right around that upper Bollinger Band, very small range candle, signaling that momentum's kind of taking a little bit of a step back right here. Is there some downside potential? Potentially we re-go and touch that 20-day moving average right in the middle of the Bollinger Bands. That's always a possibility as we kind of tag these upper ranges. So interesting price action, seeing this very, very small range candle after a very, very big, yeah, maybe we need to digest a little bit before the price action heads higher. If you take a look at the 15-minute time frame, this is interesting. The price action has been going higher. The price has been diverging, so new highs on negative divergence here. We have a gap below us, and we're above the 5-day moving average, so that can act as an area of support. If we come down here, you might see a bounce from that level. You could create some good risk to reward trades intraday right there. Really, though, I mean, if you take a look at where we've been since, you know, July, let's say at 25th, 26th, we're not far from these levels, and we're starting to see some pretty wild moves here, and we had the Fed meeting up ahead. So just be careful managing your risk going into, you know, a potential big event. As we're starting to see multiple divergences, and we'll get into that in the stock market indicator section. Let's look at the Dow Jones. Dow Jones is not at an all-time high here, but yet we've aggressively bounced from this trend line. I added it in. This is a trend line that I'm going to be following here. It's been tagged multiple times, and it's clearly acting as a level of support. So if we start breaking down from that, that'd be more of a warning sign. Now, if we break down from it but really recapture it, that's something also to watch out for a potential entry point to go long to as well. You can see here, though, really the price action hasn't gone anywhere since around May. So we're going sideways to slightly higher at this particular point in time. Price action is very bullish. Overall, we're above the 20-day. We're above all the key moving averages. If you take a look at the 15-minute time frame, I've been tracking this little pattern right here, broadening wedge pattern. We broke out above it, but then we came right back down. And today you can see we gapped up, and we just really rode that trend line here on a negative divergence. We're above the 5-day moving average. We have a gap below us. If we come down, that can act as an area of support to potentially go long too as well. Also to note, if it comes down lower, I'd be looking at an entry point right at around 349 to 350. You can see that big volume spike right here, and this previous price action can act as a nice level of support. Let's look at the Nasdaq 100. Nasdaq 100 cracked down through this trend line at a very aggressive move to the upside. This could be a start of a bigger move here in the Nasdaq 100 because this could be considered a Bollinger Band squeeze, right? We had a little head fake right here, and now could be where it starts getting some legs. This, I mean, for three days of this very, very strong price action we're seeing in multiple different stocks. Now we're above the daily Bollinger Band, though, so sometimes it can take a little bit of time to digest and then potentially press higher. Overall, all-time high. Price percent oscillator looks like it wants to cross over to bullish. This is very, very bullish move, but this is not something that you necessarily want to just chase and just jump right into. You want to see price action digest a little bit. And a little bit more on that, we'll just look right here, 15-minute time frame, all-time high on a negative divergence. We broke out of this channel. That's one we've been tracking for quite some time, and guess what? We gapped up, and then we broke through it, and just look at the aggressive move there. So if anybody was holding short positions out here, you get people that cover those short positions. That means that they're buying in. You get a push up higher. If you get breakout traders, well, guess what? They're buying right there, and that breaks out and pushes it higher. And we saw a very aggressive move to the upside these last couple of days. Now, just today, it started slowing down just a little bit. As far as you can see, the price action kind of dipped and then kind of just came back up. Still, like I said, on a negative divergence. So potential possibility here is we come back to backtest this 370 or potentially even fill this gap right here or retag with the 5-day moving average. That can act as a very strong level of support. So that is something that you also want to be very mindful of and pay attention to going into tomorrow. Let's look at the Russell 2000. The Russell 2000 has been catching quite the bid. Now, if you remember on a couple episodes ago, we talked about this obviously this range that we've been in, right? Just back and forth. And when we come to the bottom of the range, that could act as a good risk versus reward to go long. And what you can do is you can trade range bound. So you would technically buy right down here and you'd catch a move, one, to the upside of the range, or two, if you want to mitigate risk, you'd be looking at the middle of the range, which would make sense too, especially given the current price action where all these moving averages are. So we bounce back right into the middle of the range. I would expect that the dip buyers right here would probably be taking some profit right in this area as we broke this trend line, okay? Then we recovered. We're back testing it just about, and we're still below these key moving averages such as the 50, the 200, this trend line, and then also the upper Bollinger Band is also just right above us too as well. So these big type of moves, they sometimes get digested, and I would imagine there's a lot of traders within this area that caught this move that are going to probably want to take some profits or mitigate some risk. And if you take a look at the 15-minute time frame, you can see this price action, this high move right here, very, very tight price action on a negative divergence here as well. And we're back, we're back right within this channel that I've been kind of monitoring. We have this kind of area of supply right here around 224 to 225, and then we have a gap still above us right at around 226. So those are the areas as far as I'm watching for resistance. If this steep trend line breaks, I would imagine we're taking a little bit more of a breath. And potentially coming to fill this gap. So be mindful that when this trend breaks, it's going to either, one, digest it by time, means going sideways, or we're going to digest the move by taking a little bit of a rip to the downside and then trying to recover those gains. All right, so we're not out of the woods yet. A lot of this move was being taken care of because of a lot of these meme stocks started taking off again, like GME, a huge move there. And that definitely helped out the IWM. Let's take a look at a few sectors. Let's look at semiconductors. Semiconductors have been really choppy, haven't gone really anywhere since also early 2021, right around February. We're parked right in this just sideways chop action. You can say that it's been putting in higher lows and higher highs, so it has been trending up. I've been looking at various tech not tech stock, well, technology, semiconductor stocks, and they do look like very, very good setups, and I've been posting a few of those in the daily trade ideas. Price action taking a little bit of a breather right here, right? We bounced. This was a strong move to the downside, a very strong rally to the upside. And one thing that I want to call out that I actually didn't call out earlier was if you look at like the SP500 or the SPY shows it more vividly, but this big strong move, I mean, it's on declining volume. And then this move down was on increasing volume. So this could be an exhaustion type move, and that's something that you also want to be a little bit mindful of in the trading days ahead, especially with the Fed meeting coming in. So let's go back to, the sectors right here. So semiconductors overall look pretty strong, but just be mindful that these strong moves to the upside could be followed through with some momentum to the downside. We've seen it countless times. Strong move to the upside, boom, gets followed through to the downside. What will we know if this is very bearish? Well, if we don't take out this previous high and we start taking out this low, right? A trend changes by going from higher highs to lower highs, and instead of higher lows, it goes to lower lows. So a trend change would go from what we're seeing here to lower highs and lower lows. So still intact as we speak. Transports continue to diverge too from the transports, the transports continue to diverge from the industrial. So if you follow Dow theory, that's not always a good sign. These divergences, will they matter? Well, they're going to matter eventually. Is it going to be a good thing that they matters for the industrials to really start spiking up higher? Possibly, but possibly not. These divergences, you want to just have 1 foot kind of out the door, just ready to go if the party starts to end. Now, as far as the current price action on IYT, which is an ETF for the transportation index, it's been recently putting in higher lows. So that's actually a good sign, but we haven't got really higher highs yet. So I would personally like to see price action to get above 265. If we can get above 265, that means we're getting back above the 100-day moving average. We're back above the 50. We're back above the 20. Actually, we're slightly above the 20 right now. And that means also the price percent oscillator will probably be more bullish looking and above 0. That to me would signal, okay, now I think that this pullback is somewhat over. And then we'd want to start seeing it try to take out 281. So a break above 265, I would see that as a good entry point to potentially go tag the previous recent all-time high there. XLE energy, well, we already know what oil's been doing. We'll get into that chart here in the commodities section. But energy also, what did we talk about? Well, it was so overextended to the downside, we said we wouldn't be surprised to start seeing some melt your face off type rallies. And we talked about it when it was outside of the lower Bollinger Band, okay? That to me signals, okay, but just pump the brakes a little bit here. And it goes both ways. If it's above the upper Bollinger Band, like over here, pause a little bit, we might see a pullback, and we do. Well, got beneath it, and then now we're starting to see a bounce right back up into the middle of the bands, okay? Now, since we're back here at the 20-day moving average, pay attention to the other moving averages and where the upper Bollinger Band is. All right here, right at around 51. Price action, and then previous price action right here is also resistance. So this, to me, is still trending down. We're starting to see a nice big move, but because of its strength, is not something that you want to just chase into. Once again, you want to see price digest. Is this a potential move to go to all-time highs? It's always a possibility. I did like the positive divergence here on the PPO and the RSI. We're starting to see some strength, but I'm not going to get really convinced until we start getting really above 52. If we can start capturing 52 again and close above there a couple of days, then I'd feel a lot more confident because we're taking out this high right here, so we're putting in a higher high, and then we'll start to see if we can start putting in some higher lows too as well. But as it stands, a high, a lower high, a low, a lower low. So this could be the start of a trend change. Financials also been catching a pretty strong bid. They've been kind of all over the place to be perfectly honest, but we got to the upper range of that Bollinger Band. Guess what? We pulled right back into the middle, and we're starting to see some strength from it there too. They don't look all too bad. We're going to be paying attention to bonds, the TLT, the TNX. When yields rise, that's good for the financials. So also to note, if the financials are rising as well, it's good for the Russell 2000. And the Russell 2000 has been doing quite well with all the meme stock rallying, and then also financials been catching a bit here too. So we're starting to see some strength there. Let's look at a couple stock market indicators. Now, I mentioned all-time highs, right? In the Nasdaq, all-time highs in the SP 500, all-time highs on pretty much nothing. This is the new high, new low index. Just look at this. It's really weak, completely diverging. Not, that's weak. There's something weird there. And is that going to matter? I don't know. I mean, a lot of these highs have been brought up by very, very few stocks. And a lot of them are getting very overextended. So the question is, okay, is the other part of the market that's been underperforming going to start performing? Or are we going to catch some downside move in these indices? It is still anybody's guess, but this is why I'm saying you need to be careful during this whole kind of interesting rotation that we've been seeing taking place. Let's take a quick look at the VIX. VIX Bollinger Bands on the 30-minute time frame, super compressed. Again, when contraction leads to expansion. So the threat here is that we're going to go fill these two gaps beneath us. That would press the S&P 500 up higher. So whether you look at that as a threat or not, it is what it is. But just note that if we do come down and fill these gaps, that can act as a level of support. I'd be very cautious in that area, especially given if that was our next move, the S&P 500 is going to push outside of those upper Bollinger Bands, and then it would actually, to me personally, be a time to take profits, and then a time to go long is when we see a push up higher. For example, when we pushed up over here to 23.5, if you're going long, then you would have caught this fall to the downside, and you would have caught many, many stocks that just ripped these last 3 days, 2 days of trading. Okay, so Bollinger Bands are tightly contracting. We're sitting here, not going anywhere today. Just be mindful when the Bollinger Bands contract like this, they can lead to an expansion. If it goes up, guess what? Fear increases, S&P 500 goes down. Another thing to pay attention to going into tomorrow is this. I sent this out to my Discord group. I'll talk about it here shortly. The trend indicator. This is looking at a 60-minute time frame, okay, 60-minute candles, and then we put a 10-period moving average over the trend. This is something I learned from Tim Ord. Then there's two levels here, okay? So there's a green line at right around 1.5, and there's a red line right at around 0.55. Now, when the 10-period moving average comes down into this red zone, things are pretty euphoric, and that's kind of a contrarian type indicator to be a little bit more bearish, okay? And when it gets up to this green marker, that's a time to be more bullish. And as we've seen, bam, this big spike to the downside as we were right here in the green section, that was a time to be bullish, right? It was a lot of fear. But guess what? That fear was then followed through with buying. And then when we get to the red side, you can see here, bam, we saw some movement to the downside right here, to the movement to the downside. Even these little tags right here, boom, if we just follow it up, a little spike to the downside. Yeah, we recovered, but then a little bit more movement to the downside. So we haven't really touched anywhere until this area right here around August 26th. And we saw this move right here go down slightly. So it doesn't mean that there's going to be some sort of crash, but what it does mean is, hey, things are really euphoric here. Maybe take some profits, pump the brakes, move your stop losses up. Wouldn't be a bad idea. Another thing that I've been paying close attention to is the summation index. The summation index, as the market's been ripping higher, this hasn't actually moved up, which is also still diverging to me. And it could present two things. One, I mean, big breakdowns take place when the summation index goes below zero. Okay, so that's one thing. It can create a lot more fear and a lot more panic. So that is a cautionary sign right there. Another thing is, though, if we start turning up and ripping up higher with the summation index, we could see some crazy sort of melt up in the markets. Now, this to me is interesting leading up to the Fed minutes. I think we have Jerome Powell, not the Fed minutes, the summit that's going on. I think we have Jerome Powell talking on Friday. So we still have a few more days till that point. Okay, last time we were down here at zero, yeah, we did find a bottom, and then we bounced and ripped up. But this time we're down here when we didn't really have a dip at all. Interesting. Let's look at commodities. Commodities, CRB index, also getting a rip these last couple of days to the upside. Me personally, I mean, this is overall very bullish context, right? Higher lows, higher highs. These last couple weeks of trading here, though, a high, a lower high. Are we going to retake out this high and then the trend is going to remain up? Or are we going to kind of start turning around here and start heading lower? Well, we'll get into the dollar here soon, but the dollar's been dropping these last couple of days, and guess what benefits when the dollar drops? Commodities. WTIC. This is crazy to me. So just look at the range candles that each of these have. This is some very, very, very volatile price action. Very volatile price action could mean periods of distribution. I can't tell you if this is going to go higher or lower, but we can follow price. And right now, the trend is currently damaged, right? We have a high, a lower high, a lower high, and then we have a low and a lower low. Then we're below these key moving averages, okay? So yeah, this big rip to the downside is getting overextended, and guess what? It bounced right back, all right? And we're back above this little key area, kind of in this zone, a little web right here around 66 to 68. We'll watch this. We'll see what takes place. We've seen big rips like this and then follow through to more downside. So if we don't start taking out these previous highs, like this one right here, well, then the trend can still reverse. So be careful for that. Be mindful of that, because that could play big onto some energy stocks. Gold, we did catch a bid the other day. Today, small range candle. Price action kind of just subsided a little bit. We are still, we still need to take out 1840. A lot of price needs to be recovered right here. We need to get above these moving averages, because they just look like spaghetti right now going nowhere, and we have previous resistance here at 1840. I feel a lot more confident if gold can start getting above 1840, because this rip to the downside, this could be just a reactionary move to the upside. Now, if you watch my last gold video that I did on a Sunday a week or 2 weeks ago, I was buying right here. I marked out those key levels ahead of time, and then I also post on Twitter those key levels that I'll be looking at if we start breaking down through these lows. Silver, I haven't really been talking too much about silver as of recently, because, well, the price action hasn't gone anywhere. And the last time we really were talking about was this channel. We said if it breaks, to be cautious, because it can head lower. It headed lower. We came right into this previous area. That's acting as support. We're bouncing up. Could be potentially a bear flag. We're below all the key moving averages. Price percent oscillator is crossing over to bullish, but it is below zero. Just be careful on this one too as well. I mean, it's just a lot of price action that has to take place to recover. Now, the flip side to this up channel getting broken, you can actually draw a channel from the downside, right? A down channel, boom, and then boom. And now if that channel gets broken, that could be a very good sign too for the price action, because if we break above it, well, we might get a very similar type move where it just bounces to the upper range of this channel. If you're a trend trader, or a swing trader, you can be swinging the highs and lows of this. So if you bought down here, you can potentially take some profits right in the middle of the range, or you can wait till it retags up in this area. And that's what we're starting to see. It came down to the lower end of this range, starting to bounce. Bitcoin. Now, this is interesting to me. Because gold's been performing quite well and Bitcoin's kind of been stagnant, this line started to subside. This is the Sailor to Shift rotation indicator right here that we put together. And when it crosses up through zero on the 4-week rate of change, when it crosses up through zero, that's the buy signal. It doesn't mean necessarily buy there, but it means buy when the price action gets above the week. I made a separate video about this. What I want to call out here, though, is the price action of the rate of change has been heading down. So if it crosses through zero, that's the sell signal. Doesn't mean sell your position, but it does mean, hey, just pay attention to a stop loss or an area to get out of from a weekly time frame. So for example, I would put it at the low of the current week that's trading or the previous week. And if it doesn't get stopped out and the price action heads higher, perfect. Then I just re-up the stop loss. If it goes higher, I re-up the stop loss to the low of the previous week or the following week. Let's take a look at currencies. The US dollar, this seems to be a very big key in a lot of different correlations. And the dollar, the last time I talked about that was just the other episode. And from a daily perspective, I didn't really like its aggressive move breaking out. It seemed like it needed to digest and take a break. That's what we're getting right here. And it made sense from multiple different intermarket principles. However, the dollar is still looking strong from various time frames. So we broke out of this inverse head and shoulders. Okay, and now we're starting to see a little bit of a digest, and we got below this previous area of resistance. Okay, so it's still in anybody's kind of court right here, the bulls or the bears. But I will say the price percent oscillator is getting above zero. It's bullish. Histogram's kind of dying off right there, and we're still holding around these key levels. So it's going to be one to really watch. Now, if we look at the flip side of this and look at the euro, the UER/USD. You can see here also, this is potentially head and shoulders, right? We're just looking at it from the flip side here. And that, to me, also would have a target of 1.11 or 1.12. And we broke down through this head and shoulders pattern. And, we could be back testing it and then heading lower. All right, so the dollar is showing signs of strength. And when the dollar shows signs of strength, that's not going to be good for various commodities, and it's typically not the greatest for the equity markets too as well. Now, if we look at the dollar here, this is from August 23rd, but the price action didn't really move much today. I would say pay attention to this trend line, this zone right here. It's been putting high, higher high, higher high, high, higher low, higher low. price action is probably going to sit around this trend. So if this continues to hold its trend, that would be a good sign, bullish sign for the dollar, bad sign for the S&P 500. You can see here, as the S&P 500 puts in lower highs, it's been putting in higher lows in the S&P 500. So we'll see what takes place. Like I said, this breakout right here it's being followed through. That's a pretty aggressive move to the downside, and that's why we've seen various stocks, commodities really rip to the upside and benefits. So if we start seeing the dollar press higher or continue this trend up, that's not going to be the greatest sign. And in a previous episode, I took the monthly time frame and that price percent oscillator crossing over to bullish. Yeah, these short-term moves don't really mean anything for an overall potential bigger trend to change. So something to watch out for the weeks to come. Let's take a look quickly at bonds. 10-year moved up slightly up here, 30-year up slightly, and you can see the 35 spread also bounced back up here slightly too as well. But we did break down through this and we didn't quite fully recover there. And if the spread continues to fall, that's not the greatest for financials. Like I said, if the 10-year shoots up, 30-year moves up higher too, I would expect financials to outperform. And if financials outperform, small caps can do well too as well, because 20% of the IWM is financials. Now, if you look at the TLT running into this area of resistance, taking a little bit of a breather. Is it going to be one of these things where it tags this and retouches here and then potentially tries to bounce? Are we going to even reach down here? Well, there's a lot of areas of confluence of support here. We have this trend line. We have the 200-day moving average, the 50-day moving average. We have the lower Bollinger Band. And then we have the 20-day moving average where the price action is still above. Price percent oscillator is also above zero, and it's crossing over to bullish, and now it looks like it's trying to cross back down through bearish. So this could be just a digestive period, but I will say that the price action is above all these key moving averages here. So if this starts to head higher, well, obviously yields will fall, and yields right here are also trend channel trading, I should say. We tag the upper range, we come back down, tag the lower range, we come back up, tag the high range, we come back down and tag the low range. So are we going to come right back up here and tag the high range, which would be right around the 100-day moving average if it does get there? It's always a possibility, but doesn't mean that the trend of the 10-year is actually changing. All right. Right now it is trending down since April, right? Lower highs and lower lows. All right. Let's wrap this up with a conclusion. Look at the stock market. Like I said, it's been getting to these all-time highs, and various indicators are suggesting, hey, this is a time still to be very, very patient. We're starting to see meme stocks rally again. In my personal opinion, like the last episode I said, it seemed like we're going to start seeing some consumer discretionaries rise. We're going to start seeing potential energy stocks rise, semiconductors rise. The reason why I thought that was because things were very overextended. So during this weird, strange rotation that's taking place and all this crazy price action, it's very, very important to plan out your strategies, plan out your positions, and then execute to that strategy. Make sure that you have a good risk to reward. As it stands right now, we're starting to see some decent strength in the Nasdaq 100, in the SP 500, and various stocks. However, we're now, from being overextended to the downside, we're now quickly getting overextended to the upside. So I don't think that this chop is quite over yet, especially as we head in to the Fed summit. That's all I got for you in today's episode, everybody. Have a wonderful day.